Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month nickel. The main pattern here looks like it might now be the dark blue mid-December 25 to late June 26 bullish shift pitchfork. The market closest to the dark blue lower time, currently at 16,460. However, a number of other patterns are influencing the market in the shorter term. Chief amongst these is the slowly rising gold long moving average, currently 17,075, which is acting as an attractor to the market. And the pattern also I first mentioned 2 weeks ago of, and I quote, as altogether this suggests a possible recent descending scallop pattern, a pattern that looks like a backward letter J. There's usually around about 8 out of 10 times a bearish pattern. But it's early yet, though I will keep this in mind. We now need to see if this market will halt its ascent and form a lip. End of quote. It looks very much as if we have formed that lip over last week, and we have not followed on lower, which is the expected result and move for a descending scallop pattern. Instead, we have formed a mid-July to date small, if wide, bull channel. Currently 16,910 to 17,650. Highlighted in bright red on my daily chart. This bright red bull channel is a new pattern, and it may take some time for the market to develop confidence in it, if it does at all. Thus, it is still worth considering even now potentials for the descending scallop pattern, for potential below in the 15,175 zone. Something just to keep in the back of your mind for now. LME 3-month zinc. We are still here on this daily chart for a 12th consecutive week, still within the same big old pattern, and it is a big one, plus a more recent smaller pattern and a smaller still immediate newer pattern, which is being broken this week. The big old pattern is the bright red May 23 to April 25 bullish Andrews pitchfork, and especially how prices have been until this week cuddling the bright red middle time, currently at 35.39. Then there is this more recent and smaller second pattern, the dark blue April 2025 to March 26 bullish Andrews pitchfork, with the market this week reaching up and touching the slightly more acutely rising dark blue middle time, currently at 36.91, with a high not seen since August 2022. The third newer pattern captured the action since early May till this week, initially becoming a triple top, a somewhat ragged one, with aspects of a head and shoulders top about it. This pattern depended on one thing, and that was a confirmed break below the 34.40 zone, which so far hasn't happened, as prices only made one clear close under it and one on it in late June, plus the mauve medium moving average at the time, currently 34.56, stepped in as a support, knocking prices higher. Keep your eye on that mauve medium moving average below, as it is rising up slowly, but still rising up towards the market. However, that was not the only news. You see, this triple top over May and June morphed into a bright green descending expanding wedge pattern. It's currently 32.56 to 36.17. Though I do note it could now also be seen as a reverse head and shoulders continuation pattern. This expanding wedge pattern, which 5 weeks ago gave support to the market, has recently provided resistance and has been tested on the top side, which is why it is so important. Additionally, this pattern already had the requisite number of touches per side. So I said last week, and I quote, I would watch very carefully for which way the market breaks out of this pattern, upwards or downwards, though we are closer to upwards right now. However, as I said last week, so this is now 2 weeks ago, and I quote, "Be especially cautious about false breaks in either direction. Like I said earlier, all very interesting." End of quote. Well, we have had a breach of the upside late Friday and again yesterday and today. And market is trying to stabilize at these higher levels. If it does, which looks right now as it might be on the cards, then we would have a primary topside target, not a target yet, but a potential in the 37-32 area, a little above the market and above the dark blue middle time, with a secondary harder to reach, much harder to reach potential up in the 39.72 area. LME 3-month tin. In the big picture, the market here since March has been moving up from a very shallow bright red middle time below, currently 41.640, up to the very shallow bright red upper time above, currently at 59.060. And that's of the one big old pattern, still even now dominating this market. And that is the bright red, shallow, big old 2020 to 2022 bullish shift pitchfork. A pitchfork that is still in operation 4 years after it was created. Brilliant. Most recently, the market has seen the creation of an early May to late June head and shoulders pattern, which briefly flirted with being a topping action, but instead had a false break on the downside late June, and now looks like a head and shoulders continuation pattern type, with a bright pink neckline, currently at 50.730. Now prices stabilized on the bright pink neckline and have driven higher again up towards the high at the start of this year and the nearby bright red upper time. They did this by seemingly forming a small, so far unhighlighted, early July to date bull channel. Small one, currently 53.820 to 56.415, as well as tracking along a new pattern, the dark blue lower time, currently at 55.175, of the mid-March to late June dark blue bullish Andrews pitchfork. Now, there is one other thing to consider, and I'm somewhat loath to mention it and have also not drawn or highlighted it today, but that is to put this little piece of information in the back of your mind and just every so often refer to it. And that's the idea of the whole mid-March 2-date action being a possible very large ascending triangle pattern with all the implications that may have on the upside. For now, just think about it, no more than that.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.